Hello and welcome back to our channel. In this video, we're going to take a look at two of the most popular stock market indices, the S&P 500 and the Nasdaq-100. These indices are widely followed by investors, but they have some key differences that set them apart. By the end of this video, you'll have a better understanding of what these indices represent, how they differ from each other, and which one might be right for you. Let's start with the S&P 500. The S&P 500 is a market index that tracks the performance of 500 of the largest publicly traded companies in the United States. The companies that make up the S&P 500 are chosen based on their market capitalization, liquidity, and industry sector. The index is often used as a benchmark for the performance of the overall U.S. stock market. The S&P 500 includes a broad range of industries, including healthcare, consumer goods, energy, and financials. The top sectors in the S&P 500 are information technology, healthcare, and consumer discretionary. Some of the largest companies in the S&P 500 include Apple, Microsoft, Amazon, Facebook, and Berkshire Hathaway. Now, let's talk about the Nasdaq-100. The Nasdaq-100 is an index of the largest 100 non-financial companies listed on the Nasdaq Stock Exchange. The companies in the index are chosen based on market capitalization, trading volume, and other factors. Unlike the S&P 500, the Nasdaq-100 is heavily weighted towards technology and healthcare companies. The Nasdaq-100 includes some of the biggest technology companies in the world, including Apple, Microsoft, Amazon, Google, and Facebook. Other top sectors in the Nasdaq-100 include healthcare, consumer services, and industrials. Looking at historical data, we can see that both indices have performed very well over the long term. However, there are some notable differences between the two. One major difference is that the Nasdaq-100 has outperformed the S&P 500 over the last decade. This is largely due to the strong performance of technology stocks, which make up a significant portion of the Nasdaq-100. Companies like Apple, Amazon, and Microsoft have seen tremendous growth over the past few years, driving up the index's overall performance. On the other hand, the S&P 500 has historically been more diversified across sectors, which can help reduce risk. While the Nasdaq-100 is heavily weighted towards tech stocks, the S&P 500 includes a broad range of industries, including healthcare, consumer goods, and energy. Another difference between the two indices is that the Nasdaq-100 tends to be more volatile than the S&P 500. This is because the index is more heavily weighted towards growth stocks, which can be more volatile than value stocks. While this can lead to higher returns during strong growth periods, it can also lead to larger losses during market downturns. For example, during the dot-com bubble in the late 1990s, the Nasdaq-100 saw tremendous growth as investors poured money into technology stocks. However, when the bubble burst in 2000, the index lost over 80% of its value in just 2 years. So, which index is right for you? As with any investment decision, it ultimately depends on your individual goals and risk tolerance. If you're looking for a diversified portfolio that can help reduce risk, the S&P 500 may be a good choice. However, if you're willing to take on more risk for the potential of higher returns, the Nasdaq-100 may be worth considering. That's it for this video. We hope you found it informative and helpful. If you have any questions or comments, please leave them down below. And as always, don't forget to like and subscribe for more content like this.